Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today I want to give you an insight to my shopping list for March 2021, and I will tell you if I think there is something interesting in the market, and if so, what's it? And so I will give you my view on potential buys for March 2021. As always, my goal is to add to my North American portfolio. You can see here the pie of my North American portfolio. And as you can see right now, I have cash of almost 23%, which is a little bit too much. I want to be between 10 and 15% cash just to react, but now I'm at 23%. And the reason for that is with the high valuation in the market overall, it is not easy to find good companies to reasonable prices. And for me, of course, in this portfolio, the goal is to find very stable, very profitable companies. And this is a reason you don't find big hype, no electric vehicle, no big tech, which is kind of a problem. I would love to be invested also in tech, but the prices are just too high. By the way, with this very boring and stable, profitable businesses, I have a performance since the start of this portfolio at the 2nd of December 2019 of 54%, which is an outperformance to the S&P 500 of almost 30%. And so, as I said, in my portfolio, there's not a lot of tech. And so, of course, every time when the market dips a little bit, I look at the big tech companies like Apple, Microsoft, Amazon. Not so much Tesla, but I will tell a little bit more about that later. And so, of course, lately, with a little bit of a dip for these tech giants, I take a deeper look all the time and try to find a good moment to buy into these companies. And so I want to go through all of them here in this video, and then I will tell you what I think is the intrinsic value and what could be the buy target for me. And so let's start with Apple. Apple is trading right now at $127. The last weeks from the highs around 10%. And so, of course, it gets more interesting as lower the price is. For me, the buy target is $100. Around $100 is the intrinsic value for me. And if you're new to my channel, you should know if I calculate my intrinsic value, I calculate with an expected return of 12%. This is the return I want. And so $100 here is my buy target. I will at least buy a little bit if we ever see this price. Who knows? We will see what happens next. But over $100, it's just overpriced for me. Second is Microsoft. Microsoft, not really much came back from the highs, just around 3%, so almost at the all-time highs, at now $236. And for me, the buy target to buy into these great company, Microsoft, is $190. And by the way, you also find deeper analysis to all of these great businesses on my channel. Click here in the link on the top of the screen or look at my channel. You will find a lot of stock analysis there, where I go, and there I also go deeper into the business model, the management, the financial numbers, of course, and then in detail I also calculate the intrinsic value. So for Microsoft, for example, my buy target is $190. This would be the price where I would at least buy my first position. And so also here, there's a lot of room, a lot of space to the buy target. Amazon is next. Amazon right now is traded at $3,146 and came back from the highs a little bit over 10%. And so it gets more interesting, but my buy target is 2,600 US dollar, and we will see if we ever will reach this, but it's no option for me to buy over the intrinsic value. I even like it to buy way under the intrinsic value. I think this is not very likely with these big tech companies, but at least I want to buy at the intrinsic value. I don't want to buy over the intrinsic value. And always remember, of course, the intrinsic value is highly related to your expected return. And for me, as I said, my expected return when I invest in stocks almost always is 12%. And with Tesla, Tesla came back the most, almost 20% from the highs. But for me, I think the buy target for Tesla, I think and I guess it will be never. I explained that a little bit more in the video I made about Tesla. Just feel free to check this out and then maybe you will understand or even disagree, whatever, why I will never invest in Tesla. Maybe I will change my mind somewhere in the future, but in the foreseeing future, it's not a buy for me. For me, it's a big hype and a big bubble. And so I will come back to Charlie Munger. And Charlie Munger lately said in an interview, he don't know what's worse, Tesla at 1 trillion or Bitcoin at $50,000. And so both Bitcoin and Tesla are fascinating, but also at the same time just crazy. And so nothing for me as a boring value investor. And so none of these tech stocks, even when they came back a little bit, are interesting right now to buy. And so I have to look at my own companies and think to add maybe two companies I want to add is Berkshire and also Intel, uh, already number one and number three of my portfolio. And the reason for that is very simple. Both of them are still under the intrinsic value. Even if Berkshire, for example, is already up 24% and Intel also almost 25%, they are still under the intrinsic value. Intel, for example, traded right now at $62, have an intrinsic value of around $80. And I also make a deeper analysis of Intel, of course, where I explained why I think the people are way too negative, still undervalued. So I will add over time more and more. And the same is with Berkshire. Berkshire for me is the best long-term investment. With Berkshire, I don't take 12% as the expected return. Berkshire for me is the safest and the best long-term investment, just a basic investment, and therefore I just take 8% as the expected return. And when I calculate all the numbers with the 8% expected return, and then I come to an intrinsic value of Berkshire Hathaway of around $320 to $350, and so it's still undervalued. And so I will add over time. Here you see I bought my first shares in April 2020. Now I'm already up with the first position 32%, overall 24%, because even over time I added more and more, and this will just continue over time. And so Intel and Berkshire are the two stocks, the two companies I want to buy more, because it's just two great companies, two very reasonable prices in an overall overvalued market. And of course, when we see a correction or even a crash, and then also the tech companies will crash with it and maybe reach my price targets, my buy targets, then I also will take a position in them, because all of them, the Tesla maybe not so much, but all the other are very great, very stable, very profitable companies for the foreseeing future and for the long-term future. And this is what I'm looking for, just the price is not right now. So that's it for today. If you like this video, please give me a big thumbs up and subscribe to my channel, and then you will get more analysis of more businesses, and also every weekend an insight to my real money portfolio, where I give you an insight to all my actions. And if you like the whole idea, then just stick with me and follow me on my road to financial freedom. So thank you for now. See you soon. Bye bye.